myself Vaibhav. In today's session of Market Movers, we will see the US dollar, which is finding some support on the lower levels after depreciating against most of its major currency peers in last couple of weeks. Now, in last 2 to 3 trading sessions, we are seeing that USD is indeed entering into a consolidation phase, and on the lower side, it is finding some support. And in today's session, we will consider the dollar index, which is trying to rebound after making low close to 92.5, and then we will also move on to the Euro USD. If you consider the trading context for the day, the GDP data which we got for the United Kingdom is showing that United Kingdom has suffered the worst contraction in the industrialized world, and these readings for the second quarter of 2020 are testimony to that fact. Here we are experiencing the contraction of 20.4% in terms of quarter on quarter, and in annualized term the contraction stands at 21.7%. This data is the worst since this data keeping began, and certainly worse since the Second World War. Later on, we got the industrial production data for the euro area, and here some recovery is being seen. And this data is for the month of June. Now, I think almost one more month has passed, and we might have seen some leveling off on those levels. But still, the recovery is a recovery, and 9.1% growth was seen in month-on-month terms. But if we look at the same data from annualized perspective, the year-on-year terms, then there is a contraction of 12.3%. So we are far away from the pre-COVID days. Just a while back, we got the inflation numbers for the United States, and here there is some uptick in the inflation. And now, for the month of July, the CPI has risen to 1% in terms of annualized year-on-year reading, and for month-on-month, the figure stands at 0.6%, and both these readings are better than what we were seeing in the month of July. So at least from that time period, we are seeing some recovery here in the inflation as more and more parts of the US economy are opening up. But of course, the rising rate of infection, the coronavirus still is worrisome and is keeping the sentiments as well as the economy on the weaker footing. In short while, we will get the EIA's crude oil inventory data, and here we are expecting the drawdown, and I think a drawdown of almost close to 3 million barrels can be expected as I said, more and more parts of the US economy are opening up, so the demand for the oil has also risen in recent past, and for last couple of weeks we are seeing that the crude oil inventory is going down, and this trend is likely to continue for week ended 7th of August as well. Now we will focus on the technical segment here. As I said, we will see the dollar index first, and then we will move on to the Euro USD. Let's start with the dollar index technical outlook. This is the daily time frame chart, and here after finding some support close to this 161.8% Fibonacci expansion of its prior fall, the dollar index is stabilizing, and for last almost a week it has shown this consolidation happening on the lower side with not much selling pressure. Of course, we are already in oversold territory as far as the dollar index sellers are concerned, and because of that most traders won't be that keen to go for fresh shorting at current levels. Maybe a consolidation phase will likely stretch for the next couple of weeks, and then new positioning might come in, and depending on how the price action plays out, we will be in a better position to judge for the next trend at that point in time. Right now we are more concerned with the lower time frame charts, and from short to medium term perspective, we can indeed try to bet on the retracement phase, which is likely to unfold in the dollar index. Of course, in today's session, here the chart is also showing that we are experiencing some sell off on the higher side as the dollar index got closer to 95 from those levels. Almost half a percentage point have been wiped out, and now the dollar index is trying to get closer to 93.4 levels. And I think on the lower side we are likely to see dollar index rebounding, and my immediate bet is that this yesterday's swing low closer to 93.2 is likely to act as a near-term support. So let's see how things play out. Here the regression curve has flattened after this consolidation. Here we have already seen sharp sell off in the dollar index, and now the support is coming in on the lower side, and this 92.5 level has provided good support on the lower side. But from a longer term perspective, and if you consider the pivot point series on the monthly time frame, then the dollar index is not still out of the woods, and here the underlying bias still remains bearish, and we are not really betting on the trend reversal here. That is something we will do if the dollar index holds in this zone for longer time period. Right now we are mostly playing on the retracement possibility, and for that we will mostly have to rely on the lower time frame chart, while keeping in mind that the longer term trend is still bearish, and unless and until we see a fresh break above this central pivot point, which is there close to 94.5, we will need to be cautious while taking any trade in the dollar index for a long side. And shorting, I don't really see much good risk reward ratio, and because of this oversold situation on the longer time frame chart, I would say that it's better to sit on the sidelines than take fresh short selling opportunities here. From the hourly chart, we can make out that here we have the immediate support coming in around this confluence zone of this 100 and 200 SMAs around 93.3, and then on the lower side we have also got this prior swing low, which is there around 93.20. So I am expecting this price band of anywhere close to 93.10 to 93.3 to act as a near term support for the dollar index price momentum. We are seeing continuous selling after the start of European trading session. So we will need to give some more time for the dollar index to stabilize, and only if we see that price action is showing some signs of consolidation on the lower side, and only after this sell off kind of subsides and we see some consolidation closer to this support zone, only then we will be in a position to decide for fresh trading opportunities in the dollar index, while keeping the stop loss anywhere close to 92.8 should do well. Here we will be keeping our stop loss tad lower than this immediate swing low in this vicinity of prior low, and if the price action breaks below that level, then I think we will see the dollar index pretty much head closer to this immediate swing low, the 92.5 zone. And that's why I would say that only if the dollar index finds support closer to this immediate swing low area, only in that scenario we should go for fresh long positioning, with possible targets coming in above this immediate swing high, which is there around 93.9. So for a risk of around 40 to 50 points, we will have to look for at least 100 pips on the higher side, and of course that will be the possibility only if we feel that dollar index is likely to bounce above this 94 zone. So plan accordingly and see how the price action plays out during the US trading session. Now let's move on to the Euro USD technical perspective, the analysis. Here is the daily time frame chart for the Euro USD, and You can call it the inverse of the dollar index, as dollar index has high weightage for the euro USD euros movement against the dollar, and because of that, many a times the dollar index tends to some extent, not wholly, but to some extent, mirror the movement which we see in the euro USD or vice versa. And now the dollar index is getting support on the lower side, so that is true inversely for the euro USD. Here the euro USD is consolidating on the higher side, and it is seeing some sell off on the higher side, and we saw this double top kind of formation taking place around 1.19 zone. But on the lower side, it hasn't really broken below this 1.17 zone, and even in today's session we are seeing sharp reversal after making a low close to 1.17. So we have to be a bit careful here, but still I am of the opinion that we are likely to see, maybe in next couple of session. It might take time, but the possibility is there that after this strong rally, after this exceptional run on the high side, we can indeed expect some sort of retracement and consolidation phase to last, and we might even see euro USD moving towards 1.16 zone. But for that to happen, we will of course need to be kind of careful, and also we will have to try to minimize our risk on the high side. And to do that, we have to see what are the optimum levels. Suppose in case things don't really work out as per our anticipation, then we don't really want to lose too much money, and simply we should get out of the trade before it starts to hurt too much. So from that perspective, we have to figure out what are the levels, what are the possibilities in the euro USD. And here the price action is still in the bullish zone, as the price action is taking above the central pivot point, which is there around 1.162. And in the lower side, we, as I said, are finding buying support around 1.17. And if we use this another tool of the technical analysis, then the regression curve has flattened, as the price action has tended to be in a consolidation phase, and now we don't really have a strong one-sided movement. Rather, the price action has been range bound for last couple of sessions, and even in today's session the price action has rebounded closer to this lower side support. So here we will have to adopt the short-term scalping kind of approach, and we will mostly need to rely on these SMAs and prior swing highs and swing lows formation. And you can even consider this chart to be the inverse of the chart we saw for the dollar index on the hourly time frame. Here the high is kind of larger distance, but roughly speaking, we can say that we are expecting these prior swing high and also these prior swing lows, and then this confluence zone to act as a near term resistance for the euro USD. And unless and until we have a clear break above that, we can continue to bet on the possibility of euro USD finding resistance closer to this resistance area, and then continuing to trade lower. Even in yesterday's session and the session before that, I had targeted 1.18 zone, and on both the occasions we were right. But that doesn't really mean that on the third occasion we will be right for sure. There is nothing such thing, no such thing that certainty is never there. But still, we can make an informed choice here, and for that, we will need to see how the price action unfolds. After getting close to this 1.18 zone, we indeed have strong resistance in place. We have this prior swing high, as well as this confluence zone of 100 and 200 SMAs, and because of that, I am expecting the euro USD to enter into a consolidation phase, and then eventually again start to move lower. So here, watch out for next couple of sessions, see how the price action plays out. And our prior stop loss of the levels close to 1.185 to 1.186 still holds well in today's session, and for a risk of around 50 to 60 pips, we can indeed target the break below this immediate swing low, which is there around 1.171. So from conservative side, we will have the risk reward ratio of 1 is to 2, and if things go well, then our next anticipated level of even 1.16 is not that far away. So let's see how things shape up in the US trading session. So that's it from my side for today's trading session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.